says connecting. All right, we always have to wait about, I want to say 10 seconds to ensure that we're fully connected. Now I'm going to do a quick check, connecting, and I have to say the picture quality looks wonderful. We are live on TradingView. The audio sounds excellent. And ladies and gentlemen, on today's show, I have a special guest, Des from Grok Trade. It's been my pleasure to get to know Des. I think the coolest thing I've learned about Des, and I've been in this industry for a long time, more than a decade now, meeting traders and investors around the web. But this is the coolest fact to me, at least, is he might be the first. Without a doubt, he is one of the first to be consistently creating trading education videos on the web. He's been doing that since 2004, when you had to record a video and share it as a zip file. And if you even go to ChatGPT or any of these AI tools being built and ask them about this, they will confirm that, which is pretty cool, I must say. So nevertheless, it's a pleasure to have Des aboard the show, and he's got such a cool topic for us because I know, and many of you know how popular trend lines are. He's been studying trend lines for decades now. So Des, pleasure to have you. I think the best way to get started is I think people should meet you and hear about your background.
Yeah, well, Steph, it's always a pleasure to work with you. Been part of the ecosystem of TradingView for many, many years, connected with some of the founders, and have a chance to be able to be part of the ecosystem in a different level like we are doing right now. It's a sincere pleasure. And we don't want to bore people with who I am, but I'll give you the quick overview of this. If you look at my screen, there's just a little bit of information on me, but I've been trading since 1998 using technical analysis. I started a meetup group called the Carmel Stock Traders Meetup Group with 4 people. Now it's over 500 strong as a meetup group. And then I started working for Wealth Intelligence Academy, Rich Dad Poor Dad, with Robert Kiyosaki and some others as an award-winning stock mentor with them. And from there started Grok Trade. I own groktrade.com. I was using the word Grok before Elon Musk was using the word Grok. And here's a useless information for you, but Grok means to know something so well you have an intuitive understanding of it. So nowadays, so I have this trading education company where we do mentoring, and then from there I have a quant fund, which I run out of Tampa, Florida. So that's the long and short of me.
I just have to comment on the Grok Trade aspect because, yes, you started Grok Trade before Elon Musk released his Grok AI. So I think it's pretty cool that you had a similar thought. But here's the key question. How long ago did you start Grok Trade?
2007, and YouTube came out in 2005.
Wow.
And I started trading videos in 2004 before YouTube was even out there. And they were at Trade to Win, which is another platform in the UK.
Fantastic. And yeah, so you beat Elon Musk to the term Grok by more than I want to say it's almost 15 years, I suppose, if I'm doing my math right. So that is pretty cool. And also the fun fact about the term Grok is great. So without further ado, I think one thing that I believe, and as I've mentioned, we all know how popular trend lines are, is that you sort of have a master class on trend lines and you know a lot about trend lines. And I cannot wait to see this presentation because they are sometimes the most straightforward tool to use, but also can be rather complex when you actually look at the finer details because you can connect anything on the chart. So having some rules or a basic understanding is helpful.
Perfect. Well, Steph, let me get into it. Guys, this is what you're here for, and let's just get right into it. I'll tell you this, that we're going to be talking some live charts here. Know that everything we're talking about is educational purposes only. We are not giving you a recommendation to buy or sell any security. Now with that, trend lines, what you need to learn is this, that this is what you're going to learn. The components of a trend line, the 3 trend line types, and how to plot these trend lines. And we're going to go into real world examples, and we'll end on that. Okay. Now, here's why trend lines. And I'll tell you, Steph, a lot of people have this they have a hard time finding trades because they don't see trade setups. Now, to have a trade setup, you have to have a chart pattern. a chart pattern. And I'll show this with you guys. If I go over here to the, if you need to know what I'm talking about on chart patterns, if you go to freeonlinetradingeducation.com and go to chart school, you can go to chart patterns and learn these patterns. Okay, so when I say a chart pattern, I don't want to make an assumption you understand what I'm talking about. I want you to see it firsthand. So if I'm talking about a pattern, I'm talking about like this, a symmetrical triangle. But let's say we're looking at a bull flag, and I click on bull flag. What you're looking at here are these patterns. The only way to have a pattern, the reason I bring this up is I want you guys to understand this, is to have a trade setup here, you have to have a chart pattern. To have a chart pattern, you have to have two trend lines, okay? So to have a pattern, you have to have two trend lines. So to have two trend lines, you need to know how to plot them. So if we plot our lines correctly, let me reverse engineer this. If you draw a trend line and you draw it correctly and you do two of those, it's going to give you some pattern. If you learn your patterns, now you have trade setups to trade. So that's what we're doing. We're taking the complexities of trading. We're honing in on raw data. What's raw data? Price. Price is raw data. Volume is raw data. We're honing in on price in this case. And if we can quantify price to draw two simple lines, then we will see a chart pattern. If we have a chart pattern, now we have a trade setup that we can trade. So does that make sense? I hope that that's clear as mud.
No, it does. And what I'll say that's so interesting about the chart pattern aspect is I thought, just as an example, I was just thinking any chart can have a trend line, but this is a nice sort of a barrier to entry, which is you have to have some sort of setup that makes that trend line possible to use. So I understand.
Perfect. And you're backing into it perfectly because let's reverse engineer. If you get your line drawn wrong, okay, it's wrong. And you think that you can do trend lines with crayons because there's no science to it, I would beg to differ. I've been trading a long time and I've gotten away from indicators and oscillators. I've gotten away from all the a lot of the fancy gadgets and keep going back and doing on trend lines, because the trend lines, price doesn't lie. Price is the reality out there. So if you get the trend lines drawn correctly, but let me go back. If you get them drawn incorrectly, you're looking at wrong patterns. You're looking at wrong patterns. Your chances of having a great setup diminish greatly because of that. So the trend lines, here are the components. You have two trend lines to draw one chart pattern. You have an upper line and a lower line, okay? It takes 2 points to draw one line, 2 points to draw one line. So the question is, where are these points? So let's define where these points are so we can understand that. So here, if you're taking pictures, guys, if you're on the live, fantastic. Take a picture with your cell phone. If you are recording, pause, write these down. The main, minor, and major trend lines. There's 3 types of trend lines. I'm going to share these with you. And if you learn these, it's going to help your trading. So going into it, what we're going to do is get into live charts now. Live charts.
You said so it's main, minor, and because that was a great slide, and I'm actually writing down some show notes so that exactly when our viewers watch this after, main, minor, and major. Fantastic. Okay, yes, let's continue.
So let me share this while we're on this slide. Which one is the most important? The most important is the main one. So this is kind of written, the main is the main trend lines. If you get your main trend lines there and you screw up the minor and you screw up the major, you're still going to be okay. But don't screw up the main. The main is your bread and butter. The main is your big dog. The main is it. Minor is what we're going to use if you're taking notes. The minor is when we're going to enter the trade. That is when we're going to enter the trade. The minor triggers our entry. The main tells us what pattern we have. We have the pattern here. The minor triggers our entry. The major tells us if we're in danger trading into major resistance, or if we're at major support levels. Okay, so that's the long and short of it. So what did I say in all this? Don't screw up the main, because that gives you your chart pattern. Perfect. Minor. The minor just tells you when we're getting in and out of the trade. Or not out, in the trade, in the trade. The major just saying, don't make sure you're trading with the big lines, that they're not getting in the way of your potential trade that you're entering. Okay, so those are the 3 lines. So this and utilizing, and we're going to get right into this, utilizing trend lines is, a lot of people call it art. I would say it's 90% science, 10% art. And the reason that's important because if you're not able to objectively quantify how we're drawing trend lines, then everyone's drawing different trend lines, and it won't serve you any purpose. Okay, so moving on. Again, for those that want to know, if you want to learn more about the chart school, feel free to go to freeonlinetradingeducation.com, freeonlinetradingeducation.com. It's right here. And go to the chart school. And something that's cool about this site, if you go to indicators and oscillators, we're also using TradingView charts, which your guys' charts are unbelievable. I've been using you guys forever. But if you click on one of these indicators and oscillators, you go down here, this is a real chart. Do you guys see this? So this is on the spider. You can change what you're looking at, different time frames, and you get to see what indicator or oscillator we're using on these individual charts. So it's very robust using TradingView stuff. All right, so moving on.
I would just say quickly to that, I do agree. That's fantastic. And I was checking that out the other day to see the live charts on your site. Yeah, exactly. So that's that chart, that's really cool. So it shows MACD at the bottom, so they can get a real, they get to see the indicator in real time while reading about it, is essentially the process. It's great.
Because if people aren't utilizing TradingView yet, this gives them a great option to be able to look here and to see, do they like it or not? For example, the MACD, did you see how it crosses here at the top? It put in kind of a high, crosses at the bottom, it puts in kind of a low, crosses at the high. Do you see this?
Yeah,
so it's here. Incredible. So armed with this information, what do you expect to happen now?
Oh boy, geez, yeah.
I
know. We should save that for later in the conversation, because on our chat last night and today, we were saying, should we go deep into current markets? Let's make it through the presentation. We might have to talk to people and us to have this live show about what we're looking at. But I don't want to distract from the educational component, because it's really cool to me. And this will be my first masterclass on trend lines. So I'm all ears.
So what we're doing here is trend lines are deemed basic, but I'm here to challenge you and say, don't make them basic. Become a master with these trend lines so you can identify chart patterns. So what I did, this is a real live chart that I have on Apple. So I didn't add any lines. I didn't do this for the class. These are my real live lines. And when we go down, I got a tech list here. We go down this list, we'll see different, we'll see different trend lines that I have drawn. But let's analyze Apple on a daily chart. We're analyzing this right now, and let's talk about how we're drawing these trend lines. So what I'm going to do is I'm going to get rid of a couple of these so you can see them in real time, okay, in what we're doing. If I'm drawing trends, now this is very important that you get this. I have to have 2 points. The 2 points have to be 2 swings. So what is a swing? A swing high is an up leg and a down leg, an up leg and a down leg. If I have an up leg and a down leg, that point at the top is a swing high. So do you guys see this? This is an up leg and this is a down leg. So this is 1 point. And if I see an up leg and a down leg, that's a second point, for example. So what I will do is I could come back here, and let's say we don't see anything that's going to happen, and I'm drawing trend lines here. I look at my last 2 major swing highs. So look at them as mountaintops, mountaintop, 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 mountaintop. this is a little hill that could be a mountaintop. I mean, but it's a small one. But when a leg is defined with 2 or more up candlesticks going in any one direction, a down leg is 2 or more down candlesticks going in the same direction. So it not just one candlestick, I need multiple to build a leg. So I have to have multiple candlesticks going up to be a leg, multiple candlesticks coming down to be a leg. I need that peak to give me a point. So I have 2 points here. When I draw it, here's the biggest point I want you guys to never forget. We always draw the upper trend line, So the higher trend line, we're drawing from swing high to swing high, and we're going to the highest close, not the highest high, not the highest part of the bar. And I'm using Japanese candlestick bars here. That's my preference. We're going to the highest close. So armed with that information, if I go to the last 2, and I'm always looking at the last 2 swings, I'm going to the highest close, which is the top of that white candlestick, to the top of this white candlestick. Now, this looks like I drew the trend line incorrectly because I'm cutting off bodies. Do you guys see this? Let me blow this up so you can really see it.
Also, I have to say this is already interesting because I may or may not have drawn my trend line differently, which would have just connected the highs very simply. Yeah. So this is cool. This is interesting.
So and then on the lows. So let's get to our lows. This is very important that you get this next part. Okay. When you're doing a swing low, you have to have a down leg and an up leg. So it looks like a V. You see that we have a V here. This V is the down leg. Down leg or the swing low rather. It's a down leg and an up leg. That's our swing low down here. We have another swing low. Now, for those of you who can think more artistically, I'm going to show you how you can find these swing lows visually very fast. Act like this is nothing but a concaved bird bath, meaning that if you were to pour water on this area right here, that this would hold water. This would hold water. So this is a concaved bird, I call them bird baths. And you go to the bottom part of that. So if I poured water on here, forget that I have this line, poured water here, I'd hold some water here, but I'd hold a bunch of water there. So that's the bottom of my swing low.
That's a cool visual, filling up that area with water. And
yeah, it's that negative space.
Yeah.
So if you can see the negative space, you put the water in there and then you find the low of it. So what I do is I draw a trend line to the lowest close. So again, the upper trend line, highest close, the lower trend line, the lowest close. Don't forget that part. Don't mess this part up. I'm underscoring it. I'm taking my time telling you this because I don't want you to miss it. So that would be the red candlesticks. Red candlestick, the red candlestick. So if I draw it the red candlestick, the red candlestick, I'm cutting off bodies and you're like, whoa, it doesn't look correct. This is what you can do to find out if you have them drawn correctly or not. Go to a line chart in it perfectly.
Oh, interesting.
Resistance. So the line chart is made up of nothing but closes. Close point, close point, close point, day after day or bar after bar. So now we have a great way of seeing if you're drawing your trend lines correctly. So if I were to take this line, sometimes I'll take them back. And by the way, I'm drawing my main trend lines. These are my main trend lines, okay? So what am I drawing here? My main ones. And those are the most important because it's giving me a trading pattern. Extra bonus points for Steph or anybody else. What trading pattern do we have here? And I don't want to put you on the spot, Steph, but this is
it's a descending triangle, or is it a wedge? Or descending
it's a wedge.
It's a wedge.
And the reason it's a wedge is because it's 2 trend lines going in one direction. Triangles have one going down, one coming up.
Right. Yep.
So this is a falling wedge or a descending wedge, which I have really enjoyed in my trading. These are something that man's like, yummy. These are like delicious things. So falling wedge. And so the idea is trading this to the upside. Falling wedges are bullish. So now we have this trend, these trend lines. And if I go back to a candlestick, this is what they look like. Okay. So what I want to do is trade this. Okay. If we were to break out of this. So do you see how we dropped down a little bit on this one? So if I go to a line chart, we had support, support, and then we get that. That is called a jab. We're not here to teach jabs at this moment, but this is where it breaks the trend line, immediately comes back up. That's usually a very bullish indication. When it breaks the trend line, that should get really bearish, but it doesn't, it reverses back. It heads up. Now, before it heads up here, what I will do is take this and retweak it and say that is my new trend line. So I'd have support, support, support. Now the question is, where am I going to enter this trade? Now again, educational purposes only. This is not something I'm saying we need to be buying right now, and this is in the past anyway, so it doesn't matter. To draw a minor trend line. So we know how to draw our main trend lines, but how do we draw our minor trend lines? The minor trend line, there's only one trend line that we do. It takes 2 points, one trend line. And what I'm looking to do is look for 2 points on shadows. So in this case, what I'm going to do, and you can do this with TradingView, you can right click and go to clone, and I just clone this trend line, okay? Now where I'm going to set this, do you see those 2 shadows right there? If I were to blow this up and really see it, I have 2 shadows right there.
Mm-hmm.
I'm going to set that trend line right on top of those. Now, normally I'd have a shadow here, but here's the secret of the minor trend line, guys. The minor trend line, I want it to be really close to the main trend line, really close, not too far apart. And I'm hoping I can find 2 points to draw this minor trend line. Because if the price gets above the main trend line, like this first blue one, I will not look to trade it. I will only trade it if it gets past the minor trend line. So watching this trade, let's see what happens. Now, I already know that that gave us a jab where we went below the trend line, came back. So this is probably going to get pretty bullish. And right there it does. My entry would have been triggered. So the price went above my minor trend line. And then if you look, it had a very good run. A very good run. So when it pops, the very next candlestick did a gap down and came and closed above the main trend line, but the minor gave us some resistance, but it recharged itself. See the volume increasing? That's saying that we have power here breaking through. The bears are starting to buy to cover, or buy to cover, and you got the bulls starting to buy. You got increased in volume, and then boom, a pop, and this thing just starts to run. So very cool to see. Any questions before I move on?
Yeah, Des, I was waiting to get some questions in because there were a few things that caught my attention that I really enjoyed. One of them being that you drew your trend lines on a candlestick chart, and many of us use candlestick charts. I would wager to say that 90% of modern traders use candlestick charts. But what you did is after you drew your trend lines, you switched it to a line chart and the trend lines connected perfectly. That was a really neat tip. Do you do that often? Do you use every day? So you combine the line chart with the candlestick charts. Could you just show people again when you switch it to a line chart how perfectly that lines up?
Yeah. So for people that are just joining, here's the long and short of it. When we're drawing our upper trend lines, we're going to the highest close, to the swing high, to the highest close swing line. So I'm going to get rid of this line just to clean it up. But it looks like I drew the trend line incorrectly here because I'm cutting off a body. Same thing down here. When we're drawing lower trend lines, you're always going to the lowest close. Well, the lowest close is always the red candlestick. I go to the lowest close, red candlestick. So if I go to this red candlestick right there, we have lowest close, the lowest close, but it looks like I drew them incorrectly. But watch what happens when I go to a line chart.
So cool. Now it's perfect.
They're perfect. So this just what's interesting is if I was trading this at the time, which I might have been, full disclosure, if I was seeing price drop down to this line, because remember, I have this main trend line down here. If I'm seeing it drop down here, all of a sudden, and I see it break, I'm thinking, uh-oh, but this next pop heals itself. Do you see how it popped back up? That is a bullish play, more advanced. This is not for beginner traders, but that would trigger a potential buy for me. And because I'm, being a quant fund, and we mentor, we teach this stuff. I mean, that is a potential trade. It's called a jab, and then it pops, and then it would have broken there. But what's interesting here, again, a line chart, support, broken for a millisecond, and it comes back up. That's telling us that the bulls are very, very powerful in that environment. So the reason now, some questions, and I'm answering the question for a lot of you right now. Excuse me. The question is, well, why not just use a line chart? Because if you just use a line chart, you'll start drawing you have a swing high here, you'll start drawing to things that aren't swings. So watch these two when I go back to a candlestick. These aren't swing highs. So learn to draw your trend lines on candlestick charts first, and because you'll capture the true swings, the true bird bass, the true mountaintops. And then go to the line chart and dial it in to make sure you're not cutting off any lines.
I have to say, after we conclude this show, this is something I'm going to go have fun with. I want to see if I can draw perfect trend lines with candlesticks and lines, just switching on and off. Seems like a great just experiment. First time I've really seen this.
So because no one, because I taught for Wealth Intelligence Academy, Star Trader, Option Success, Wealth and Rich Dad, Poor Dad. And I sat on a curriculum committee over publicly traded companies, the largest, very high revenue companies. And I got to, I was one of five overseeing curriculums, and nobody would get granular like this on trend lines. And I didn't mean to. I just, with my tenure in trading, been doing it a long time, I just gravitate towards the things that increase my probabilities in trading. And it wasn't an indicator oscillator. It kept being these trend lines. And what's interesting, to your point, Steph, armed with this new information, you can immediately go back and back test it easily. You can just see. So let's back test this in real time, just so you can see the power of this. Okay, so let's say we have this. We're armed with this. Let's say we're armed with that. Okay, this is all we see. This is all we see. So I don't have this upper trend line going right now. I have a different trend line. So this trend line at this moment, if this is all I see, goes from here. Oops.
Yeah, you have to
goes from highest close to highest. Well, hold on. Let me just redraw.
I was just gonna say, you probably have to just delete it and start over. Yeah.
Highest close to highest close. Okay, so that's what I have going ahead. My lower trend line, I have this going right now. Okay, so let's say this is what I have. But I see another swing here. Do you guys see this swing? I would be like, whoa, wait a second. I could draw another line right here. Highest close to highest close. And if I go to a line chart, I'll say, oh yeah. And what's cool with TradingView is you can hit control and it will snap to it. By hitting control, and you can nail just putting it right on there.
Magnet mode.
Yeah. So what's cool here is I would know this candlestick right here, that's a potential buy right there. This is the buy because we broke over the top. I'd put a minor trend line there, something that's very close, and it hits two of these shadows. So my minor trend line, let me just draw it. I don't want to make any assumptions. You're following me. So if I right click and go to clone, I'm going to draw this minor trend line on these two shadows, that shadow right here, that shadow, and this shadow. So my entry would be over the top of that shadow. And then it had a nice run after that. So this, what I'm saying is you can immediately back test these and look at it in real time to see if there's any merit to this. And you will see there is intense merit to this. I mean, really, really powerful. Okay, now.
And Des, really quick, I know I'm keeping this aspect of the conversation going, but I just wanted to say for the listeners, one thing I think will catch their attention as it caught mine was you used the word jab for those trend line breaks. Also pretty neat. And I've been trying to study up on those types of moves. I was unaware that jab was the term, but I see why if you break and snap back, it's sort of like just a huge fake out. And
I came up with the terminology.
Is that your term, jab? Great term.
Jab is not. Hold on. Jab is not. That's from some other trader that used it, and I adopted it. But my term that I do have is called the bullish and bearish death hook. If you were to Google bull death hook or bear death hook, or actually if you go to this site, Free Online Trading Education, this is to your point on jabs. I'll show something super cool that if you go to, let's go to the chart patterns again, and you see where are the death hooks at? It's probably right in front of my face and I don't see it.
I'm looking for it too.
Right here. See bullish death hook?
Oh, yeah,
right here?
Yeah.
So if you go to chart patterns, go on and you can Google it, it'll pop up. But this is what's super cool. If you have a symmetrical triangle and it breaks down, do you see this? And then it immediately heals itself and comes back in, very bullish. Symmetrical triangle, it breaks down below that trend line and it comes up and heals itself, really, really bullish. So these are, so we had the triangle and it broke down here. And this is for the geeks out there. This is called an banded baby. Banded baby is when you have a gap down, two open windows there, and it gaps back up. That candlestick, very bullish once it comes back in, and these charts can just machine gun straight up. So bullish and bearish, same thing happens to the downside, but it's outside the scope of this training. But anyway, it's same thing where it breaks down like a jab, but they're a little more severe. And when they come back in, they can be really good trading opportunities.
That's so cool. And it makes so much sense because it strikes me as a capitulation event or a fake out or sort of a, the bulls or whoever was on the other side of the trade were just waiting to get in, and that was their moment. So don't let me hold this up any longer, but that was a really cool segment of this class.
Yeah. So something like, if I was drawing the trend line coming up here, I'll share another tidbit with you guys. Do you notice that when I draw the trend lines correctly, I get these dangling white candlesticks? There's this white candlestick that kind of dangles down there, and this one that kind of dangles down there. Well, those could be potential trading opportunities. Anytime you see something like this, a gap down run up, it could get bullish thereafter. Same thing here. You get this gap down run up, it could get bullish, which it does here. So if I go over here and I'm looking at drawing my trend lines, I could go here, pull a trend line, go to a close area. I'll just go to this close, go up to these close. So we hit support, support, support. Do you guys see that? If I go to a candlestick chart, do you see the dangling white, the dangling white, the dangling white? Look at what happens every time we cut off a white. I call them white tails. This white tail gets bullish. This white tail gets bullish. This white tail gets bullish. And this is specialist behavior activity. It's outside the scope of what we're doing here, but sometimes the specialist behavior will, the market makers will tilt their hand to what they're doing when they're playing in the markets, and we can exploit that with trend lines. Trend lines are really, really powerful. But if we were to follow this up, we had support. Support's broken right here. Look what happens when it breaks that trend line. Do you guys see that?
No more white tails, that's for certain.
Yeah, no more white. So you don't see that. So if I were drawing, let's say I don't see the break yet, and this is all the data I have, I go back to a line chart, my trend line, I would have another one going from this area. I don't know if you can hear the sirens. That's Tampa here, fire trucks. Do you see I have this other trend line going right there? And then if I have this trend line going here, coming over to here, I have what's called a rising wedge. So the rising wedge, that would give me a bearish trade if and only if we break down, and we break down right there. That would be the entry opportunity to the bear side, and that's how it would have played out in this scenario. So Apple would have gone from 195 down here to the 178 level. So it's a lot of points right there. So drawing these trend lines correctly, you can start to see major opportunities, major trades. So it takes 2 lines to draw a chart pattern. Okay. Now the one, and I'll wrap up on this one. The one pattern I showed you, the main chart, the main trend line. The main trend lines give you our chart pattern. Then I showed you the minor trend line, which tells us where we get in. What I have not showed you are the major trend lines. So a major trend line, you pull in a lot of data, bring in a lot of data. And when you bring in this data, you're looking for major trend lines. So I would go from here to there. And from way down here to right there. So those are my major trend lines. So when I'm trading, like for example, if I was looking to get bullish because of something I saw up here, I might be careful because I got this major trend line. And then once I do this, I can major trend lines. And I'm looking at Apple right now, and and this is a neat little pattern here. We have what's called a bull flag. So you go up, 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 a little bull flag. It's price action, kind of flag waving in the wind and kind of descending. And then you got the breakout right there. Pattern, boom, boom. And that's where we're at. But one of the issues we're dealing with this one is if you come up here and draw a resistance line on where we had resistance before, we're nearing that area of resistance. So that's something to watch out for. Look at AMD. AMD is up almost 10% today. Let's go take a look at AMD. Look at this huge. Wow. And look, you're looking at one of my trend lines on AMD. So we have resistance. That would have been the trade right there on this candlestick, and boom, 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 up, up, up. Now, what's interesting, look at it like this. We hit, it's kind of like a ball that hits the floor and ceiling, and floor hits the ceiling, comes down, and it misses the floor. Do you see that?
Mm-hmm.
So it's relative strength because it missed the floor. It rockets back up. So what it's given me is if I show you what reality is we have a falling wedge right there. So when that pops and when it breaks that's our trade. But big pop there. Amazon, if you look at Amazon, this is, I was hoping trend lines would pop up. I don't have any trend lines plotted on this one, but I could quickly do this. If I was looking at these trend lines, I would have that going on. So support, we touch support there, support. It looks like they're drawn incorrectly. Okay, it really does. Let's zoom in and make sure, if this is right or wrong. If I go to a line chart, support. So it's perfect. I'm not cutting anything off. But if I go to a candlestick, there's I'm cutting off some. I'm going to the lowest close here. But what happens is, if that happened, this was the problem. When we broke that trend line right there, it broke a rising wedge. If I go from highest close to highest close, we have a rising wedge. That rising wedge is a short position opportunity if, in fact, it breaks down, and it did break down there. So that would have given us a short opportunity as an example. Okay.
Well, so
go.
Yeah, Des, there's 2 questions for me. And I just want to make sure I fully understand the concept of major trend lines. Those are essentially the macro, bigger picture confines of the trade. Is that the way to think about it?
100%. So I'll do it again on this one. So I'll pull in as much data as I feel like I need to get to encapsulate. I want to always encapsulate where current price is. And what do I mean by that? So I pulled in a lot of data. I'm going back to 2018 here on a daily chart, and I can even go to a line chart here. and I'll go to this bottom area to this bottom area. That's a major support line, like a major, major support line. And the upper line would be here to probably there. So I have these lines that I want to pay attention to if we get there. So those are my major, major trend lines. And it needs to encapsulate where we're at right now. So price needs to be between those two major trend lines for it to really be
fantastic.
beneficial.
You know, I have to say, speaking from just my experience, and maybe other traders will feel this way as well, I don't do that enough. Really zoom out and draw those macro, or in this case, these major trend lines, and just to keep them on your chart so you always know. And maybe 1, 2, 3 years from now, you find out that, oh my gosh, price is back to this major trend line I drew many years ago. That's kind of a cool feeling too, if you can keep those trend lines saved on your chart for that long.
100%. What's nice with TradingView is my trend lines do get saved, right? So, which is really, really cool. So we have this falling wedge. If I were to draw this here, you can see the wedge. It's a falling wedge, really bullish. And on this one, I would have. Let me see what this looks like. Yeah, it would be something like that. And as soon as it breaks over, it took, after this nice run, it had to catch his breath, chopped around here a little bit, and then it made a nice run after that. This is the bigger time frame, so I'm taking in a lot of data. So even on the bigger major trend lines, you can see these patterns still working out. It's fascinating to see.
Yeah, how quickly can you identify these patterns now by looking at a chart? Is it instantaneous? It's instantaneous, right?
Almost. But what's interesting is, even though I'm an artist by nature and I can see things a little easier than what other people, so I can see all these negative spaces and be able to draw these lines. But what I found is I can't just use my eyes. I found out that I have to draw these trend lines for me to really see if what pattern I truly have. So if I was drawing something like this, it'd be like that. So you can see what type of pattern. I love these wedges. So anytime I see something like this, like, oh man, I really like these a lot. And isn't it fascinating how price stopped right at it? It shot over it, came back down and stopped right at that trend line. And the trend line was drawn off of that candlestick and this one, these two swing highs. And look where it's fascinating how everyone uses these trend lines. See how volume is really starting to increase here, and then boom. And we get a nice run after that. Nice run.
And I have to ask as well, and that was something I was meaning to ask you was, so volume, this is always something I find interesting talking with traders and investors, especially new traders. What's your view on volume when it comes to these setups? Does it matter to you? Do you like to see the volume confirmation? Like, you see the trading volume?
100%. Yeah, gotcha. Because raw data is price, raw data is volume. Indicators and oscillators take raw data with a cute little formula to kick out some sort of, some sort of pattern of using past data. So they're lagging by definition. What I like to look at is honing in on raw data, price, and volume. But volume isn't perfect. I have to be clear there. Volume, I want to see volume in high bases get really low. And on a run or a breakout, I like to see volume tick higher. I don't always see that, but it's a good rule of thumb for sure.
Great. Yeah, that's always, because it's often a default on the chart. It's nice to know, oh yes, this is a good confirmation or extra added data point to these trend lines. So quick question for you. Have we finished the key points of the presentation?
I have.
Wonderful. Well, before maybe we discuss a little bit of modern markets, I did have one more question for you about this. Are wedges your favorite pattern?
Yeah, for me, if you couldn't tell.
Yeah, got it.
Wedges and bases, high bases and low bases, yeah.
Great. So for all the traders out there who are listening and just watch this class, I think it's very cool to know that you also just got a great demonstration of wedges. So if you've ever wanted to trade wedges or explore them more, this was a great tutorial. And you can always reach out to Des, by the way. He's on TradingView. I linked his profile up at the top of the chat. And you could reach out, check his profile out, give him a follow, look at the links he has in his profile. Whatever questions you have, send them his way. So Des, before before we wrap up, because we're about 45 minutes in, and I do think we have a little bit of time here to talk about markets at the current point. And it ties back to when you showed us the chart of the S&P 500 earlier with the MACD. I haven't forgotten about that from the start of the show. I'm curious if there's sort of anything that you wanted to go into about markets now. It might be cool to look back on this show in a few months or just to see what we explored.
Okay, fair question. These are real life charts on my charts that I use. So I'm a YouTuber. I have a YouTube at Grok Trade, and these are charts I'm showing. What is fascinating is I have this trend line. I want now armed with this new information, okay, that you guys have been given. You can see I have this trend line. When I pull in a lot of data, I go from here to there, big ones. Well, what's interesting is we've shot above it right now, above it, and then we came back and it's acting as resistance. So it's resistance, 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 resistance. We got above it, it looked really bullish. Then resistance, resistance, yesterday resistance, but now it's back above it. You see how this trend line is being highly honored. So this is very, very important to know. If I were to bring in some indicators, I'll bring in a couple. MACD, I have a bearish divergence here. So we're going higher here, bearish divergence. And we're making a RSI bearish divergence, and we've been way overbought at this moment. So I'm a little concerned on what I'm seeing in the markets, that we look a little toppy at this time. So that's what I'm looking at on the spider. If I pull in the weekly chart on the spider, in the spider, we broke a big symmetrical triangle. So if you look here, I have a big symmetrical triangle. 3 weeks ago, we broke it and we went really bullish. The question is, and this is my concern, if this comes back down and breaks below this trend line on the weekly chart on the spider, you will have what's called a bearish death hook reversal pattern. And this could get really bearish and fast. So in other words, I'm watching this. If we go below this, that could be very bearish. And if you want to know bearish death hooks, again, go to Free Online Trading Education or just Google bearish death hooks and look at that chart and see how they act and what they do a lot of times. So it's just something to keep an eye on.
That's great application of bearish death hooks. I'm so happy we just took that full circle from a first time introduction to the concept in the coin that you term to this actually might be playing out right now. So that was cool.
And what's interesting is even on the monthly chart on the spiders, we have, so when I say monthly, I mean, guys, look at this. Let me get rid of some, blow this up. Do you see this swing high? This goes back to 2022. This swing high goes to 2023. So this is years of data here. We broke above it last month. This month is doing this. So the question is, if it drops back, you have a bearish death hook or a jab in this case. They could be either, where we did this, but if we get bearish in December and we go down and closing below this, 2024 could get really bearish for us. And listen, Steph, I have 1 hour until the market closes, so I'll have to wrap this up because I've got a lot of things going. But listen, I do want to share this with everybody. You and I talked about it. If you go, this is called the inverted yield curve. Is it okay? Can I go into this?
Yes, let's do it. This is a perfect way to wrap up. And you have the Pine editor open, which is so cool. You must be coding your own Pine script. Okay, we're all ears. Ladies and gentlemen, the last part of the show. Des, take it away.
Well, I'll tell you this. If people need to wake up to the fact that AI is here in a big way, TradingView has, as far as I'm concerned, now listen, they're not paying me to say this. They have the best Pine script. They have the best opportunity for us to create trading algorithms or ideas and put those into their system to be able to get immediate performance data on back testing. So that UI or user interface is just second to none. I love what they do and how they do it. Now, what I'm looking at here, let me tell you what my big concern is. This is from The Economist. This isn't from us or anywhere for any of us here at Grok Trade. We're just watching this, and here's the concept. The concept is bonds. If you buy a 10-year bond, the yield should pay you more money if you commit to a 10-year bond. It should pay you more than a 2-year bond. If you buy a 2-year bond, it should pay you less than a 10-year bond. Every once in a while, and it doesn't happen often. In history, it's happened 6 to 8 times. It depends on how you measure it. But it's only happened around a half dozen times. But the 2-year bond pays you more than the 10-year. The 2-year pays you more than the 10-year, and that's called an inversion. I'm able to get this, and you are too. You can type this in, pause the video, or take a screenshot, and you can type this into the search and get the exact chart that I have right now. You can do this yourself. And so let me share with you what I'm showing you. Here's the long and short of it. If an inversion happens, so far it's been flawless. Every time after an inversion, the market, the economy here in the US has always entered into a recession with double-digit unemployment. So it's an ominous bearish signal anytime we have what's called a bond yield inversion. We are in one right now. And if you look at this chart, this big dark black line is the S&P 500. This is the 10-year and the 2-year average. Anything below this 0 line means it's inverted. It should never be inverted. But when it does, bad things tend to happen. Let me give you an example. We had this inversion. There
we go.
Yeah. So this is the 2000, or this is the technology bubble pop. So in the tech, I started trading in '98. So I was trading back here, and we couldn't lose money. We just kept going up, up, up. But anyway, but if you look here, we had an inversion here. This vertical red line is anytime the inversion heals itself, meaning that's no longer, it was inverted, but no longer inverted. So it's no longer inverted. I put this line there, and it showed we got a nasty little drop in '98. Right after that, a nasty little drop in '98. We get a big inversion in 2000, and we go into the tech bubble crisis. I mean, just a huge drop after that. And then we had a little one here that happened in 2006, and we had a little pullback here. But if you look here, we had a bigger one here. This put us at a market top before the great recessionary pullback 2008. So we get these inversions. We get an M for murder. You guys see the M at the top, M for murder, and then a monster pullback. What is fascinating, I can't get my head wrapped around this, but if you look here, I'm pulling in more data. If you go here, what was interesting is we did get an inversion right here in 2019, right before the COVID crash. Do you guys see this big COVID crash, which was the deepest, fastest crash that we had since the Great Depression? Only missed it by 3 days, statistically speaking. It was, that doesn't look bad on this chart. I'm telling you, that was people were freaking out. But we had a slight inversion that took place right before that. So this is flawless so far. If I go to where we're at today, this is the deepest and longest inversion we have ever been in history. If I pull in a ton of data and look at this, you can see that we are down here. Look how we are so far below this. And as far as, I love that you guys had the little dinosaur. But if I zoom in, you can kind of really see this. Look at this inversion, 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 and look what happens after these inversions. And it gets bad. And now we are looking at a biggest, longest inversion we have ever have witnessed. And the question is, when it heals itself, we have between 1 to 4 months before statistically we should be in a market, a recession. So there it is.
Well, I have to say on that note, Des, and that was a fantastic ending, because that was especially the market facts were so cool to me. That fact about the COVID crash, I did not know that. So that was also very cool. And it's a perfect way to actually wrap up the show because it's December 7th at the time of recording. And it'll be fun to watch what happens in 2024. Maybe not fun.
Right.
I should say interesting, because you've just set the stage for a lot of great discussion, whether you know fellow traders, you hang out with them on the web, and you just watch the end of this show. I think this is a good discussion, and it'll be interesting to see if anyone has any feedback or commentary about this. It'd be cool to circle back in 4 months and see where we're at, because I'll be watching. So Des, it was a pleasure, and we were thrilled to have you on our show. And before we head out, any final words for new traders or investors, just to leave them with a quick tip or two?
I would say this, the taller that you want your building to be, the bigger your foundation needs to be. So make sure, every architect knows this. If you're going to get into trading, invest in yourself, make sure you're well educated. Education, there's no substitute for it. The fastest, most efficient way of getting high-level education is through a trading mentor. Find a trading mentor, make sure the trading mentor is a real live trader and has the ability to train and willing to do it. If you have that, you have found gold. Make sure you find that. We do mentoring. Feel free to look at us or find your own mentor. That is something that I find very, that's what did it for me. Without my mentor, my first 2 accounts, Steph, I blew through. I lost all my money in my first 2 accounts. I went and got formalized trading education, got a mentored, and now I own a hedge fund. So
fantastic. No, great. It's part of the journey. A lot of traders blow accounts, you never hear from them again, and that's how it definitely starts sometimes when you're a new trader investor. So I love that wisdom, especially the aspect of the taller you want your building to be, the bigger the foundation. Excellent piece of advice. Des, it was a pleasure, and we will see you around, and thank you to all of our viewers. I think we crossed about 200 plus views in this show, and you can find it on YouTube and on our TradingView account on TradingView. So thanks to everyone for watching.
take care. Bye.